The Bank of Korea decided to leave its key interest rate as it is at 2.5% on Thursday, citing ongoing uncertainty over in the Middle East, while also signaling the possibility of a rate hike in the near future. For more on the central bank's latest policy decision, we turn to our Kim Jun-hong tonight. Welcome, Jun-hong.
Great to be here, Dami.
So, Jun-hong, another rate freeze from the central bank. It's quite a long pause, isn't it?
It is. As markets widely expected, the central bank held its rate steady at 2.5%. It was also Governor Shin Yeon-song's policy debut, which put extra focus on today's decision.
The Monetary Policy Board decided to keep rates unchanged at 2.5%. Instead of raising rates right away, we believe more time is needed to assess geopolitical risks, semiconductor growth, and their impact on inflation and growth.
Since lowering the benchmark rate to 2.5% in May last year, the central bank has kept rates unchanged for 8 straight meetings. That leaves Korea's benchmark rate frozen for more than a year, while maintaining the rate gap with the U.S. unchanged at 1.25 percentage points at the upper end. Policymakers cited elevated uncertainty at home and abroad, pointing to risks related to the Middle East and inflation likely to remain above target due to higher oil prices. They also highlighted volatility with the exchange rates, housing prices, and household debt as areas that need close monitoring. The decision was backed by 5 of the 7 board members, while 2, including the senior deputy governor, favored a quarter-point hike to 2.75%. Despite the split vote, Shin said policymakers largely shared the same view on key economic conditions, adding that reaching a consensus was not that difficult.
Well, it does seem like a cautious move, but we all knew a rate freeze was coming. Jun-hong, now the Economic Outlook report also caught quite an attention today with a surprisingly strong upgrade to the country's growth. Tell us more about the growth outlook.
It was actually a quiet surprise. So the Bank of Korea raised this year's growth outlook to 2.6%, up sharply the 2% forecast back in February. The BOK also upgraded next year's growth forecast to 2.1% from 1.8%, while some optimistic projections suggest growth could surpass 3% if the semiconductor upcycle remains strong. And much of that seems to come down to stronger chip exports fueled by the AI boom, which the governor says helped cushion downside risks.
The Middle East conflict is expected to pose a drag on growth, but stronger semiconductor demand, IT exports, and policy support are expected to help offset some of that weakness.
Yet the latest outlook also signaled mounting inflationary pressure. Consumer inflation is projected at 2.7%, up by half a percentage point. Core inflation, which is a key indicator of underlying price trends, was also revised higher, projected at 2.4%. The bank said higher oil prices are likely to spill over into a wider range of goods.
So with a mix of, upside and downside risks, what path is the central bank likely take going forward,
Right, so regarding that, Shin actually gave a clear signal today. So he said that rates are likely to move higher at some point. But the question is when, by how much, and how far?
This time, the path ahead looked relatively clear, whether looking at inflation, growth, the exchange rate, or housing. Higher rates could help keep those factors in check. The key questions now are when to move, how quickly, and to what level.
Analysts say today's message strongly suggests a rate hike could come as early as July. Some even say this year may not end with just a single increase.
If hikes continue into the first half of next year, rates could even move back toward the 3.5% range. But the key issue is whether the semiconductor cycle can reverse Korea's weak growth trend.
I see. Now, Jun-hong, before we let you go, you mentioned this is the new governor, Shin Yeon-song's policy debut. For our viewers who may not be too familiar with him, who is he? And tell us more about his background.
Well, first of all, Shin is widely regarded as one of Korea's leading experts in international finance.
Right.
He previously served as the head of the Bank for International Settlements Monetary and Economic Department, often referred to as the central bank for central banks. Since his nomination, he has been widely viewed as a pragmatic yet hawkish policymaker. And today's decision seems to reinforce that view as he signaled a potential rate hike.
The fact that the senior deputy governor called for a hike suggests Shin may already see higher rates as a fairly realistic next step. He also appears likely to take a clearer, more principle-based approach in communicating the Bank of Korea's policy direction.
Shin also faces a number of challenges. If rates move higher, he will also have to manage the burden placed on more vulnerable sectors, including small businesses, lower-income households, and industries already under pressure. At the same time, Shin will need to watch for the side effects of tighter policy while keeping an eye on exchange rate swings and housing market risks.
Indeed. Junong, thanks for coming in tonight. Appreciate it.
Thank you.